Hey everyone, it's Rolando with your Utah real estate market update for the week of 3 of March 2nd, 2026. And the numbers this week tell a very interesting story. Inventory is building, buyers have more negotiating power, and at the same time, demand is accelerating as we head into the spring market. Let's go over the numbers. Active listings are sitting at 10,766, which is higher than it was last year at this time. We're 11.6% higher year over year, and the month supply has risen from 3.6 to 4.5 months supply, which means we're moving closer to a balanced market instead of the very competitive conditions that we had a couple of years ago. New listings are continuing to rise. More sellers are entering the market as mortgage rate stability gives people confidence to make a move. Under contract and sold activity, you can see that there's an incline going up. The trend is up. Buyer demand is actually very strong. It's much stronger than people realize. Pending sales jumped 22% year over year, which is a powerful signal that serious buyers are active right now. Weekly pending contracts are up around 63,209. That's nationally. But here's the interesting part. Closed sales are actually lagging. Closed sales are actually lagging those numbers. That means a lot of this activity is happening up here and it's not getting down to this part where it's sold. So some of these deals are taking a little bit longer to get closed, but they're moving it forward. Price reductions in days on market. Homes are sitting on the market for about 79 to 80 days right now, which is about a week longer than last year. Price reductions were 917, which is actually much lower than the 1500 plus range we saw in mid 2025. Despite all of the negotiation happening, prices are still holding. The median home price in Utah crossed $510,000, about 2% year over year. Average prices are essentially flat first from the year to date, which shows the market is stable, but it's not crashing. This is what normalizing market looks like: more inventory, longer timelines, and balanced negotiations between buyers and sellers. Mortgage rates are also helping to stabilize things. Rates ended around 5.99, near the lower end of the expected range for the year for 2026. Mortgage spreads are close to normal levels again, which keeps rates down and more stable. So the big takeaway this week: buyers have more negotiating power, inventory is growing, and demand is still strong heading into spring. This is not a distressed market. This is a balancing market. This is a normalizing market. If you're thinking about buying or selling this year, there may not be a better entry point for you. Subscribe, drop your zip code if you would like a more detailed report on your specific area.